Welcome to the Deep Dive. Today, we're taking a close look at, well, a giant Reliance Industries Limited. We've got their latest numbers here, Q4 FY2025, and the full year, and honestly, the scale is just staggering.
It really is.
They're the first Indian company to cross the 10 lakh crore mark in total equity, and their annual revenue,
Yeah.
1,071,174 crore. That's about $125 billion. Up 7.1% from last year.
Absolutely. It's a huge number, and it shows that massive foundation they operate from. Lets them expand, lets them handle, economic bumps.
Right. And it's not just one business. This report covers so much ground.
Yeah, you've got the oil to chemicals, the O2C side, then there's the huge Reliance retail operation, Geo Platforms, the digital side, and of course, oil and gas E&P. It really gives you a picture of a major driver in India's economy.
Exactly. So our mission today really is to cut through all this data, find the key insights, what's really going on, and maybe where they headed. We'll touch on things like Geo's 5G adoption. It's massive, and the data usage is off the charts. Then Reliance Retail, all the store openings, the online stuff, even launching Shein.
And the OTC challenges, too, with global volatility, plus their big bets on new energy. Lots to unpack.
Definitely. So let's start with the big picture financials. What really stood out for the full year?
Okay, so for FY25, you mentioned the gross revenue. That 1,071,174 crore, up 7.1%. Their EBITDA, that's a key profit measure, hit 183,422 crore. That was up 2.9%.
2.9%.
And profit after tax came in at 80,787 crore, up 2.7%. Also important, their capital expenditure, their investment back into the business, was huge. 131,107 crore. That's $15.3 billion.
$15.3 billion. Wow. That really signals their focus on future growth, doesn't it?
No question. They're investing heavily across the board.
All right, let's zoom in on Geo Platforms, the digital arm. Seems like a major growth engine.
Oh, absolutely. Geo had a very strong year, FY25. Revenue and EBITDA growth were really driven by a couple of things. First, the impact of tariff changes increased plan prices.
Right.
And second, the big rollout of their home broadband. That includes both the fiber connections and their fixed wireless service, AirFiber.
And the numbers reflect that.
Yeah. For the full year, operating revenue was 128,218 crore. EBITDA hit 64,170 crore. That's gross around, say, 17-18%. Pretty remarkable. Quarterly revenue is getting close to 34,000 crore now.
And subscribers are growing too, right? Despite those tariff hikes.
That's right. They hit 488.2 million total subscribers by the end of Q4. They actually added 6.1 million just in that last quarter. So a good recovery there.
Okay.
And their ARPU, average revenue per user, that also climbed up to 206.2. That reflects both the tariffs and, importantly, just more data being used.
Which brings us to that data tsunami, as you called it earlier, 49 exabytes in one quarter.
It's a mind-boggling number, up 20% year on year. And they mentioned, it's a global record, not just India.
What's driving that specific surge?
A huge part is 5G adoption. They've moved 191 million users onto 5G already. That's the biggest 5G base outside China.
Incredible.
And get this, 45% of their total wireless data traffic is now flowing over 5G. And those 5G users, they consume way more data per person.
That's the key, isn't it? But the report also said they haven't fully started monetizing 5G yet. So they're giving people this super fast data, often without a big price jump.
Seems like it. Feels very much like the 4G playbook, Build the capacity, get people using it heavily, create the habit, and then figure out the premium services or tiered plans later. They're banking on that higher consumption, creating monetization opportunities down the line.
It's a long game, and they use the Mahakumbh Mela as a kind of test case, right?
Exactly. Handling that kind of density, 2.2 million gigabytes of data, 141 million voice minutes. It showed the network could handle extreme stress.
Peak load was something crazy.
Yeah, around 20 million simultaneous voice requests and 400 million data requests. It gave them huge amounts of data on how the 5G network behaves under pressure, learnings for the future.
Okay, what about fixed wireless? AirFiber. Seems like they're making real inroads there.
They are. One report cited them having 85% market share in that fixed wireless space. They're using their 5G spectrum and some specific tech, they call it UBR, to offer these really fast 1 Gbps speeds, both up and down.
Synchronous speeds, yeah.
Right. And having their own tech helps keep deployment costs down. The big goal is ambitious: connect 100 million homes.
And it's not just homes, they're doing private 5G for businesses too.
Correct. Setting up dedicated 5G networks inside places like their Jamnagar complex. Think robotics, advanced security, things needing super reliable, low latency connections. They can carve out sort of dedicated slices of their network for these specific enterprise needs.
Then there was the Starlink announcement, teaming up with SpaceX. That could be big.
Potentially, yes. Still needs approvals, of course. But it could really extend their reach into remote areas where fiber or even air fiber is tough. The plan seems to be using Geo's retail network to sell the Starlink kits and service.
Okay. And lastly, under Geo Platforms, Geo Hotstar. The merger happened, service launched. The numbers look wild.
Explosive is the word. Just 3.5 months after launch, they're reporting 280 million paid subscribers. That puts them right up there with, Netflix globally.
280 million paid.
Wow. And 503 million monthly active users, plus a massive content library, 320,000 hours. They claim it's like 6 times Netflix or Prime. They're doing exclusive deals with U.S. studios.
And they have that huge viewership for the cricket final.
Yeah, 61 million watching at the same time, a record. Plus, their TV network has a 34% market share. It's clear they're using Geo's reach and Hotstar's content to really shake up the streaming market fast.
Okay, so Geo's definitely firing on all cylinders. Let's pivot now to Reliance Retail. Also looking very active, especially opening physical stores.
Oh, yeah. They added 2,659 new stores just in FY2025. That brings the total to 19,340 stores, covering nearly 78 million square feet of retail space. It shows they're still very committed to that physical presence alongside digital.
The omni-channel strategy. And speaking of digital, GeoMart seems to be ramping up hyperlocal delivery.
Significantly. They saw a 2.4 times jump in daily gross orders for hyperlocal by the end of Q4, and they're using their stores, over 2,100 of them, across 4,000 plus pin codes as fulfillment hubs.
Smart use of existing assets.
Exactly. It's driving up average daily orders too by 62% year on year.
What about their own consumer brands, the FMCG side?
That division's doing really well. They called it the fastest growing FMCG company in India. Pulled in about 11,450 crore in revenue. Brands like Campa and Independence are growing fast. Campa apparently grabbed double-digit market share in some key areas.
And new products, too.
Yeah, they launched a sports drink, Spinner, and bought a personal care brand, Velvet. They're distributing through over 1 million retail outlets now via 3,200 plus distributors, even looking at exports.
Okay. Fashion and lifestyle. Seeing growth there.
Yep. Positive like-for-like sales growth in Q4. There were refreshing formats like Trends, making them more digitally enabled, Trends 3.0, and this Project Impetus's thing is about getting designs onto shelves much faster, like weekly updates.
Looking things fresh.
Right. And their own brands within fashion grew 30% year on year.
And AJIO, the online fashion platform.
Also growing. Added 1.9 million new customers in Q4. Now has 2.4 million different items, up 44% year on year. They're bringing in more external brands too, and rolled out same-day or next-day delivery in 26 cities.
It's a difference.
Huge difference. Their big sale event brought in over 600,000 new customers. And, of course, the big news was launching Shein on AJIO. Started with over 12,000 options.
Interesting move. And grocery.
Grocery apparently outperformed the industry. Good growth across the board, general merchandise, apparel, even niche premium stuff like fancy coffee and healthy snacks. Those grew about 30%. And Metro, their B2B cash and carry, also saw strong growth, especially from hotels and restaurants. The HoReCa segment was up 37%.
So retail is definitely a dynamic, expanding part of the picture. Let's switch gears now to oil to chemicals, O2C. This is the bedrock, but facing trickier conditions.
That's fair. O2C revenue in Q4 was 164,613 crore, actually up 15.4% year on year. But the key metric, EBITDA, was down 10% to 15,080 crore.
So selling more but making less profit on it.
Essentially, yes. It's down to, well, a mix of things. Weak global economy, geopolitical issues messing with markets, and specific imbalances in downstream chemicals that really squeezed margins.
Right.
Despite that, for the full year, revenue was up 11% to euro 626,921 crore, and they processed a record 80.5 million metric tons of material. So operationally very strong, just facing margin pressure.
And they mentioned optimizing feedstock costs and operations.
Yeah, they focused on sourcing crude oil economically and running their integrated complex efficiently. But the profitability of fuels, the cracks, stayed pretty weak.
Why was that?
A combination of factors, really. Geopolitics, new refineries coming online globally, maybe weaker demand from China, high inventory levels. It all pushed down the margins for gasoline, diesel, jet fuel. Benchmark cracks were way down compared to the previous year.
Okay. But domestic demand for some products was okay. Polymers, polyester.
Yes, domestic demand for polymers rose 5%. PP, PE, PVC all saw some growth. Polyester demand was even stronger, up 11% across PFY, PSF.
But margins were still tough.
Yeah, that's the catch.
Yeah.
Even with decent demand, the actual profit margins on polymers and the whole polyester chain were apparently near 20-year lows. Just very tough market conditions. There were some small signs of improvement for PP and PVC margins right at the end of the year in Q4.
What about GOB, the fuel retail venture?
That seems to be a bright spot within O2C, especially ATF, aviation fuel sales, up almost 47% year on year, way ahead of the industry average. And they're really pushing the EV charging network, GOBP Pulse, over 5,750 charge points now, plus expanding their compressed biogas, CBG, stations. Plans seem aggressive for more network expansion there.
All right, let's move to the exploration and production side, oil and gas. Record annual numbers there, but a slight dip in Q4.
That's correct. FY2025 as a whole was a record year for revenue, 25,211 crore, and EBITDA, 21,188 crore for the E&P segment. Q4 saw a small dip compared to last year, mainly because of some planned maintenance shutdowns and just the natural production decline from their big KG-D6 field.
How much is KG-D6 producing now?
In Q4, it averaged about 26.7 million standard cubic meters per day of gas and around 19,600 barrels per day of oil and condensate. They did note current rates are actually higher than that average, though.
Okay. And coal bed methane, CBM, anything happening there?
Yeah, actually looks like a bit of a turnaround. They finished drilling 40 new multilateral wells in the first phase, adding about 0.4 MMSCMD of gas production, and they've started drilling the second phase. So after a period of decline, CBM seems to be picking up again.
Good to hear. Okay, finally, the big strategic push. New energy initiatives. Building these gigafactories.
Definitely a major long-term focus. They're pouring investment into building domestic manufacturing for solar and batteries, primarily.
What's the status on solar?
They've commissioned their first gigawatt-scale solar module line already, making these high-power 720-watt peak modules BIS certified. The big plan is full integration from polysilicon raw material right through to finished panels. Engineering's done, construction's ongoing for the rest. Target is commissioning late 2025 or early 2026.
And batteries. Equally ambitious.
Oh, yes. Targeting 30 gigawatts of battery manufacturing capacity. That covers cells right up to full battery packs, mainly aimed at utility-scale storage.
What kind of battery tech?
They're focusing on LFP lithium iron phosphate, using large-format prismatic cells known for being safer and lasting longer. Construction started there, too. Pack assembly should begin in 2026, then cell production after that. They're also building out the supply chain for battery materials, basically everything except the raw lithium carbonate.
And hydrogen. They have a partnership there too, right?
Yes, a tie-up with Nel, a big European player in electrolyzer technology, specifically alkaline electrolyzers. It's a manufacturing and tech collaboration, letting Reliance make these crucial green hydrogen components in India. Positions them well for that market and meeting government PLI scheme targets.
And just quickly, the report mentioned they track key financial ratios.
Right. Things like debt service coverage, interest coverage, debt to equity, current ratio, the standard toolkit for monitoring financial health, managing debt, making sure they can meet obligations. It shows they're keeping a close eye on the financial stability side, too.
So, yeah, we've covered a massive amount of ground. It really paints a picture of Reliance Industries as this just incredibly diverse and powerful entity.
It really is. This deep dive gives you that snapshot, a huge player in India, increasingly global. You see the momentum in digital with Jio, the dynamism in retail, the resilience in their core O2C business, even with headwinds, and then these huge, ambitious bets on new energy.
Which leads perfectly to our final thought for you, the listener. Given everything we've discussed, the scale of investment, the different market dynamics, and then what do you think will be the biggest growth engine for RIL over the next few years? Is it going to be Geo and digital continuing its tear? Is it Reliance Retail capturing more of the consumer wallet? Could the traditional energy business see a strong rebound? Or will the big new energy investments start paying off significantly?
It's a fascinating question with no single easy answer.
Exactly. This deep dive is really just a starting point. We definitely encourage you to dig deeper into the areas that caught your attention today to really grasp the complexities and opportunities facing Reliance. Thanks for joining us on the deep dive.